This is Tom Scott out of Keller Williams, of Port St. Lucie, known as the Great Scott Group. And today we have Christina Cotullo from one of our favorite mortgage companies, and she's going to tell you a little bit about herself. And we have an answer and question sort of thing going on today that's going to be very exciting for you and give you, hopefully, a lot of information in this challenging market in 2023. So, Christina, go ahead.
Thank you so much. So my name is Christina Cotullo. I am a loan officer with Cross Country Mortgage. I've been in the mortgage industry for over 20 years now. I started right out of high school and have stayed in it ever since. I'm here to answer any questions that buyers have today. And if you guys, after this have additional questions, feel free to reach out to either one of us to address those.
Christina, what do you see as some of the challenges for 2023 in the real estate market with mortgages?
Right now, the biggest question is like, what's going on with the market? Where's interest rates going? Is the market crashing? Buyers are on the sidelines. I feel like, they hear that interest rates are high and now is not a good time to buy. And I just feel like real estate's always a good time to buy, right? But there's pros and cons to every market. And what I try to address with buyers when I'm speaking with them is like, let's talk about what you're looking to do, what you're comfortable with, make sure it makes sense. Don't just, focus on the interest rate. Let's focus on monthly payment. So I feel like a lot of buyers are just hesitant. As we see the inflation improve, we're likely to see the interest rates come down too. And it's just causing a lot of concerns and misconceptions of what's going on. And I always ask people, well, would you rather buy in a market with less competition or more? Because when interest rates come down, what's going to happen? Everyone that was wanting to buy is going to be out there looking to buy a home, and there's going to be so much of a bidding war. You're going to be, going in over asking price. So it's like, buy now, refi later. You can always change your rate, but you can't change the price you pay for a home. So while, yes, rates help your monthly payment, helps your buying power, there's creative ways that we can get into too during this on how to keep it as affordable as possible. Once rates come down, the values will spike, and then you're going to be in a good position then, especially with a lot of equity and be able to refinance.
Yeah, Christina, I remember back when one of our first house we got, it was interest rates were 18%.
Right.
So, and as history tells you that, the rates go up and down, and then they potentially can come down in the future. And so with that said, one of the important things that we think, and I had a customer yesterday, we took them up to Vero and Sebastian, and we looked at houses, and they found one they loved.
Mm-hmm.
And they live here in Port St. Lucie. And so, questions we were asking, we didn't really get into the interest rate thing too much, but we started asking questions like, what are the reasons that you want a home? So, is it growing family? You retire in your dream home? Is it an investment? Are you relocating because of a job? Or do you have family moving back in with you? Or you need a tax write-off, or the list goes on. So you have to sort of weigh this, because it's sort of like a seesaw effect of what's important and what you need.
Mm-hmm.
And again, as you say, you can always, refinance, or there's other options down the road.
Right. Yeah. And that's exactly the conversation that I have too when I'm working with somebody that's looking to get a pre-approval. Is it a primary residence? Is it an investment? What monthly payment are you comfortable with? Obviously, there's the qualification behind it. We have to make sure that they meet the guidelines, but what is ultimately your goal? So when I put things together, they realize, well, yeah, now actually does, make sense. The interest rates are going to come back down. And then if you're an investor, investors understand why now is a good time, because you're, obviously for that appreciation, you're not going to be in those bidding wars later on. So great time for investors, and for first-time home buyers, it is also a good time. Yeah, payments are going to be a little bit higher maybe, but when you buy now versus with a 30% increase in appreciation, if you think about it, the payments are going to be right around the same. I mean, I prepared a graph that shows buying now versus in the future. So if you buy right now at, let's say, 7.2% interest rate, your payment is going to be roughly about $100 more now versus if you waited in, let's say 2025, the values go up 30% because rates drop, let's say to 4.5%, your payments are very close, maybe $150 difference a month. So, but you can refinance then to that lower payment and you're saving like $500 to $700 a month. So your payment's going to be even lower if you buy now, refi later, let's say 3 to 5% down, refi later on when you have all that equity, remove private mortgage insurance, save $500 to $700 versus buying when it's already, 30% increase.
Well, as time goes on and you have a PMI, which is private mortgage insurance, at what time can that be dropped, which will help lower their payment?
So once you have 20%, technically 22% equity, let's say you don't refinance and you wait till you have 22% equity, you can, if you're in a conventional mortgage, you can drop that PMI. But if you rates drop and you decide now's a good time to refi, most likely your value's gone up quite a bit, then we can remove the PMI during that refi period.
I had a friend that, will be a potential client in the future. And he says, can you get me a CMA, a competitive market analysis, so I can see what the value of my home? And it had gone up substantially and he was able to drop his PMI. And he says, you can't believe what that'll do for us. He says, that just gives me a little extra play money. So why does a client that's looking for a house need to be pre-approved?
It's really important up front because you don't want to find out later on once you go into contract that you actually don't qualify. Everyone just throws around the words pre-qualification, pre-approval very loosely. And it's very important to get a full pre-approval done where a loan officer is working with you and really reviewing everything up front, understands what the underwriter is going to be looking for, because there's so much involved on our end that it really takes a knowledgeable team to know all of that. I mean, we got cross-country mortgage. We have pretty much every loan out there for a buyer that's buying a residential home. And so to go through all of those guidelines, we got to make sure everything's to the T. And so it's important to do that up front for many reasons. One, you don't want to find out later on you don't qualify. And two, when you're putting in an offer, sellers take you more serious if you did your due diligence up front. They want to make sure that you're a solid buyer, you're serious, that you went through the motions. They don't want to just let anybody in their home. You have all your ducks in a row for a smooth transaction. So you got to be careful with the lenders that are not, they're doing a qualification with you, but they're not verifying all of your information. So we see this a lot where someone goes to a bank or wherever and they get their pre-qualification or pre-approval. And later on, they find out, oh, actually, something came up that they didn't see before, and you want to avoid that. So
what if they say, geez, do I qualify to buy a 400? So, of course, that's a buyer trying to call me. So anyway, say they want to be at X dollars, right? And with that, for instance, say 400,000, it could be through whatever it is, and all of a sudden they forget to tell you that there's an HOA, and the HOA is $500 a month. How does that make a difference?
So I do a pre-approval up front, and then say, okay, when you're ready to, and give the price range, give all the information as far as numbers and what to expect, which is also a very important reason of getting pre-approved. You want to know how much it's going to cost you a month. So, and then I look up the property once they're ready to put an offer in, and I look up to make sure there's not actually an HOA. I look to see if it's a condo or a townhouse or a single family. Make sure it's zoned residential. So we do catch that up front, where that is something that does happen a lot with, the industry. Those little details are not looked at, and that could make an HOA can be, here it could be $500 a month, 300. That's a big difference for somebody's buying power that you want to make sure you get in the beginning at pre-approval stage.
I just had a client recently, and she says, well, I've been renting for 20 years. And the amount of money that she spent in rent was astronomical. And she had great credit and everything. And so we showed her some houses, and she talked about, that sort of breaks even based on what I'm buying, but I couldn't convince her about equity and actually, had she done this 20 years ago, she would almost own her house and so on and so forth. So just a comment out to those renters, yeah, you might want to, get pre-qualified and find out if you can actually get into a home.
Yeah, if you take $2,500 a month in rent, which honestly in a lot of places that's low, but if you take that and you're paying rent in over a 5-year period, that adds up. So it amazes me when people are, and this is because they don't understand, which I get, the news scares everyone, but when you're paying rent, you're paying 100% interest. You're paying to somebody else, you're not seeing a dime of that ever. When you're
Well,
paying.
I had that lady say to me, well, I don't pay a mortgage. And I said to her, we had great common ground. And I said to her, you are, but you're paying the landlord's mortgage.
Right. Exactly. And that's exactly what it is. So I'm like, well, great news. Our rates are lower than 100%, so you're paying someone else's mortgage. You're not going to see a return. Whereas when you're paying a mortgage, it could be a little bit higher, it could be a little bit lower than your rent, but it's like a savings in a way, because part of that goes towards the paying down of your loan, where you're creating more equity. So for those that are renting, that I always encourage to, like, let's just have a conversation and see where you're at. And it could be, maybe just getting your ducks in a row. Maybe next year you're going to be more prepared. Maybe now isn't the time. I'm not saying now is the time for everybody, but it's worth checking into to get your ducks in a row. The most important is that the buyer is comfortable with the terms and can afford it, and that's really the most important.
Yeah, with that, I've got some notes here that I look off of, and it talks about, purchasing and having a large escrow, which is really saving up money. So that's going to help reduce your payment. And, obviously you have programs, so you don't need a huge down payment, which is great, 3 and 5%.
Yeah.
And so with those 3-5%, is there sort of caps on either the price of a home that you're going to purchase, or any income debt to ratio issues, or is there anything that people should think about or know about?
If you're looking for low down payment options, it's not necessarily, doesn't have to be a first time home buyer. We have them for repeat buyers or move up buyers. But typically the minimum on an FHA is 3.5% down, and FHA tends to be the program we use mostly for like a first time home buyer. We also have conventional with 3% down credit. For FHA, you can go down to 580 with 3.5%. However, we also have down payment assistance to cover that if it's needed, and if you meet the criteria for that down payment assistance. So it's very achievable. If you think about it, and someone that's renting, if they're going to go into a new lease, let's say they have to get first, last, and security, that could potentially be close to what a 3 or 3.5% down payment is. It's a lot more achievable than people think. A lot of people think that you need 20% down, you need perfect credit, you need a 2-year work history in the same job, which is not the case. So yes, we have all of those low down payment options. We have the first time home buyer programs with the down payment assistance.
One of the things that we've experienced a number of times, and obviously that's why we like working with you, is that we find out that a lot of clients, they look at these, I'll call them big box banks, and they take, and they really don't seem to have a pulse on the market around here. And same thing happens with insurance. We see a lot, we go through this, we live this every day. And so can you explain why the advantages of going through you, Christina?
We have a much larger array of programs available, so we're not restricted to just one bank. What I love about cross country is that we don't have those additional overlays that a lot of banks have added. We don't just write any loan. We make sure we meet the standards, the Fannie Mae, Freddie Mac, FHA, all the industry standards. We make sure we meet those, but we don't add extra layers. Let's say FHA says 580 minimum credit score. You can go to a bank and most of them are going to say 640. So that eliminates a whole lot of buyers, right? And then let's say the debt to income ratio with FHA is 57 back end, and a bank might say, well, we're not going to go over 50. I have a lot of buyers in that 50 to 57. It is like, thank God for that FHA loan. And they have just a tighter window. If you don't fit into their little box, then it's not going to work. And we have all of our investors are the big banks, except we control the process in our company. So we underwrite the loan, we fund the loan, and then they buy it from us. And a lot of banks prefer to buy loans in the secondary market. They would rather us take the risk up front. It's what we specialize in. We don't open checking accounts or car loans. We do residential loans. And so the banks buy them in bulk from companies like us, and they'd rather do that and us take the risk up front. So we have more lenient underwriting guidelines. Whereas if you go to them directly, it's a little bit, they're tighter. We also have those additional portfolio options or more creative financing for, let's say, self-employed buyers. Let's say they need a different type of loan because they're not meeting the income requirements that Fannie Mae and Freddie Mac require. We do have other options, and we have other portfolio loans with tons of different investors that we can look at, which are very popular right now. So like 12 months bank statements, 1 year tax return, or a DSCR loan for an investor, which is a no income verification. So I have the ability to just do all kinds of creative financing, which is what I like, getting the creative deals and, finding a way where where they thought there was no hope. So we definitely have that ability to make it happen for a lot of buyers where they were denied before. I think that's a plus. I think that's a big advantage. That's why I'm the main reason I'm with the company I'm with.
Well, that's great. I mean, you've given us a great insight. And anything to add before we close, Christina?
You are very experienced. You're great at what you do. You have, a lot of different niches I know you work in, different markets. And so all types of buyers too, and so we have programs for all of them. So I'm here to help you anytime.
So, this Tom Scott and Mary Scott, we're the Great Scott Group, the Keller Williams of Port St. Lucie, right in front of PGA, right close to Tudor Fresco. So you can go over and have lunch there. And we just have a great time in Port St. Lucie helping our clients. And you can check us again out at greatscottgroup.com. And we just opened a new landing page to our website, which is Living in Port St. Lucie, Florida. So we've had tremendous views. We've had videos already, which is on also the Great Scott Group YouTube channel. And with that, we've had some of these videos recently have got, thousands and thousands of views that people have been asking us about. What about Port St. Lucie? What can you tell us? Show us a neighborhood. Give me a video. They're asking all those great questions. So I want to thank you, Christina, spending time with us today. And I know you're always available. And that's one of the big advantages of getting hold of somebody like Christina, because they have a phone, they have a cell phone, they're easy access, they're around all the time, they can answer your questions, they're doing big volume, and they have tremendous products that usually can help everybody. So again, Christina.
Thank you. Thank you very much for having me.
Okay, have a great day.